This is Wes with Pikes Peak Trades and back with a market update video. I've had quite a busy summer, a relocation of my family from overseas back to the US, trying to get moved in to a new house, trying to get all kinds of things situated with my family. So I've had to take a hiatus from these market videos for a while, but I think we're at an incredibly important juncture. Things are settling down a little bit for me in my private world. So I wanted to get a market update video out to you. There's just so much more information that I can communicate in a video as opposed to trying to get tweets put together in a thread. So you're going to notice a significant count update on the XPX. Here we're looking at the weekly chart. And due to the magnitude of the selling that we've really seen throughout the month of September, a 1-2 bullish count is gone. And if you just look at how much that has sold off, I think we've got to start matching degrees here to make sure that we're in a wave count that makes a little bit more sense. So I have this month's pullback so far as a minor 4 degree, which would match the same degree of the pullback that led up to the election in 2020. And we've essentially seen a drawn out minor 3 wave that's taken us to the recent all-time high. Now, the alternate count is that a more significant degree top is in place, and we're going to see this gap right here probably closed with more selling to come, let's say, over the next 3 to 4 weeks. Now, a couple things real quick about why I like this count is this gap right here, I think is actually quite significant in the placement of the count. You're going to notice it is right in the middle of a sub-degree 3 of this 3, of this 3, of this 3. So technicians a lot of times call that a gap of recognition. What that means is if this count is correct, it's going to stay open. And there's a chance that it might stay open for quite a while longer as we see the S&P 500 move up to possibly some very surprising prices. Certainly prices that would be going against the current bearish sentiment that is out there. So I'm going to maintain this bullish count. We got a nice daily hammer off of the lows today. It's holding this channel that connects the 1 to minor 3 high from the candle bodies of wave 2 and to today's low. And it held, at least today on a closing basis, the 21-week EMA. So my projection going forward is that we're going to see a fresh 5 waves. 1, 2, 3, 4, 5, up here to some fib extensions that would be a little bit more typical of a wave 3. Okay, so now obviously if we see a big breakdown, we lose this 21 EMA, we lose the channel. That's when I think this gap of recognition here is going to get challenged and probably going to get closed. That's as bearish a count as I'm willing to consider right now. Now, let me get you into the details. So the details of the sell-off, I think is we've seen a 3-wave move down. So an ABC down into this minor 4 low. Now, the more bearish blue count would have this as a developing double zigzag. So an ABC down to a wave W, and now we're looking for an oversold bounce. Okay, now it would be possible that the big selling gap today stays open. I don't think that's likely. I think we're to see a bounce that will probably close that gap and probably backtest this broken 50-day SMA, and that would be at these 2 typical fibs. So something, let's say between about 44.30 to 44.50 would be a potential area if you're bearish for you to look to reshort. Okay, now digging down into those details, you're going to notice that count here in blue. So that count would have an ABC down, into the wave W, and then an A, B, C up into the X wave, and then a massive collapse, because we would be looking at this Y leg as a 1.618 extension of the W leg, which would put it into the area of this 0.382 fib for wave 4 and give it a chance to close that potential gap of recognition that I've already mentioned. That's just above 4,000 on the SPX. Okay, now, how do we decipher where things are going to go from here? Well, there's really three paths, and two of them are aligned. So if my main probability count is correct, and we've actually put in a significant load today, we have to see an impulsive 5 waves up. So a 1, 2, 3, 4, and a 5. The X wave would only get us 3. So if we see so a little bit of continuation of a move up into Tuesday, a stall, a retreat, one more burst up to possibly backtest this broken channel, and then a collapse, that's not going to look very impulsive for a fresh bull leg. Okay, now the other possibility, and I've got this in red and only in red here on the short-term count, is that this bounce actually ends quite quickly and we see another complete collapse. Now, that would actually be much more bearish in my opinion, and I would actually be including that in an impulsive down count that I haven't actually indicated here on the daily or the weekly, but it would look something like a wave 1, 2, wave 3, 4, a wave 5, but then we would most likely not be in this double zigzag blue count. It would be probably a primary degree top that's correcting all of the price from the March 2020 low, and that would be the very bearish scenario. I'm not yet going to entertain that until we see some more price bars. Okay, so what I would project, I think we're going to see is that oversold bounce will continue at least onto the open Tuesday, probably a pullback. Now, if you are an aggressive bull, you would be looking to buy that higher low with your stop at Monday's low. Okay, and then you would be needing to keep in mind some of these fib targets, because if we're starting a brand new bull leg, there's going to be some fits and starts here. There's going to be some ups and downs before we can actually get into a wave 3 of higher degree that could really propel this forward. Okay, so that's really the only index that I want to talk about, because I think this is the most important one. But within the S&P and obviously QQQ, we really have to talk about Apple. So essentially, since February, Apple, Google, and Microsoft have nearly single-handedly held up the market. Without them, you really haven't seen tech or the NASDAQ go anywhere. Okay, so just using a logical argument, if we're really going to see a big breakdown market-wide, then these big names are going to have to break down. Okay, so let's take a look here at just Apple. So yes, there is a very bearish red count that would have Apple retracing much of the price from the March 2020 low. That would correspond to just the beginnings of the red count that I showed you just briefly on the SPX short-term chart. Okay, but notice that from a weekly perspective, Apple's chart is still very healthy. So we have all of its moving average clusters in a bull alignment. So the last 3 weeks have just taken it back down towards the 21-week EMA. And by the way that I'm counting this, if we're to see a bullish resolution in the general market, we've got to see an impulsive resolution in a name like Apple. So I have the March correction of this year as a significant wave 2. And then we're working on 5 waves up, 1, 2, 3, and I think this week we're working on sealing in that 4. But because that is within what needs to be a bullish impulse wave 3 here, this 4 cannot overlap the top of this 1. So you can really easily use Apple as a proxy for whether we're going to get more selling in the general market. If this high right here breaks, then I think we're very likely in the bearish blue on the SPX or even the very, very bearish red. Okay, so from a bullish perspective, I think your risk reward here is actually pretty nicely aligned. That you can look for a higher low entry on Tuesday. You can set that stop right there at that high, which is just above 137. And if it breaks, you take your medicine. You take the loss like a machine. You realize the market's telling you a message and you get out of the way. Otherwise, I think the possibility exists that we could see a very, very surprising bullish move up. Okay, so just kind of drilling down into those details. It's a typical wave 4 fib for Apple. There's that circled highlighted area. It is attempting to hold here this potential bullish channel. In fact, if I drag that down a little bit, it's almost a perfect hit right there with this low from early June. So if you're bullish and your mode is to buy channel dips and try to sell them at the channel tops, then we could be looking for a really big move up. And you'll just kind of see that on the short-term chart here, that possibly we've got a little bit of turnaround in the making. Okay, so we're at an incredibly interesting juncture. Just kind of wanted to get back to that SPX daily chart. Where we go from here is going to be largely determined by the structure of the next bounce. If it does continue again, if it does not continue, I think that is a very bearish thing. And then we should be expecting that all upcoming rips after the dips are going to get sold aggressively. So as always, we just have to project and monitor and adjust. I think hopefully over the next few weeks to a month, I'm going to try to get back to a more regular presentation of some weekend videos. Certainly want to try to get one in this weekend because I think the rest of this week should be super exciting and I think extremely important for resolving the market into the year end of 2021.